Good morning. Thanks for your company. This Tuesday, the 8th of September, I'm Jessica Amir, a market analyst with Bell Direct. Well, with US and Canada being closed for Labor Day, a public holiday, markets were as quiet as a mouse overnight. However, we saw Trump take the stage saying that there could be a vaccine in the US before the November presidential election, but hopefully as early as October. Over in Europe, their stocks rose sharply, attempting to claw back some of last week's fall. London's market up 2.4%, with the German and French markets following. We saw economic cyclical stocks in Europe, like autos, leading those gains. On the commodities front, also quiet there. Gold is steady at $1,935 US an ounce. It's been treading water, moving up and down on the last couple of days, moving up and down on the same spot pretty much. Oil, however, has fallen further below the $40 US mark, losing about 5% over the last two sessions. So it's now trading at $39.07. That's US. Copper, meantime, is near two-year highs. It's at its highest level since June 2018 at $3.05 US, driven by rising demand from the top consumer, China. Now, Goldman Sachs says copper is its favourite commodity, and the bank says the price will run further. The bank says keep an eye on BHP as it's positioned the best to benefit from the rally. The Aussie dollar, meantime, is tracking low at 72.7 US, holding near two-year highs though, while the US dollar has gained purchasing power. Now, what to watch today? The Aussie share market is expected to rise for the second day. The futures are suggesting a lift of 0.4% or a rise of 25 points. Yesterday, we did see the market lift 0.3%, puffing high, but not quite enough to claw back from last week's fall of 2.4%, marking the third fall in 3 weeks. So attention this afternoon will be on the US and how their futures will shape up, attempting to rebound from Thursday and Friday's sharp fall, where we saw the Nasdaq lose over 5% across those 2 days, the biggest sell down that we've seen over the past 5 months. Back home, a lot of companies will go ex-dividend from here on in, transferring their right of the dividend to shareholders today. Austal, ASB, BlueScope Steel, BSL, Jumbo Interactive, JIN, and Northern Star, NST go ex-dividend. On the economic side of things, business confidence numbers are out for the month of August, expected to remain quite weak because Victoria, the second most populated state, is in lockdown. Trading ideas, QBE, Australia's second largest insurer, was reiterated as a bell potter buy with an $11.90 target. That implies 21% upside from yesterday's close of $9.84, after we saw QBE shares lose about 8%. Now, despite the alleged leadership scandal, Bell Potter likes QBE's strategy to drive its transformation from de-risking the business by exiting loss-making, underperforming markets and products where there's little competitive advantage, to also reducing leverage and improving capital, while QBE is also looking to enhance productivity. Bell Potter expects the business to return, importantly, to profitability next financial year. That's 2021, in fact, and for profits to grow from thereafter from 2022. So that's QBE, a Bell Potter buy. Northern Star, NST, Sandfire Resources, SFR, and Champion Iron, CIA, may be worth a look, as Trading Central's data has identified all three of those stocks are showing bullish signals, indicating their prices may bounce off yesterday's close over the next several days, according to standard principles of technical analysis. For more detail, I encourage you to visit Bell Direct's Technical Insights section on our website. Happy trading, stay safe.